What is going on with this market? Has the game stopped for GameStop? GameStop is down 81% in 7 days. 81% down. 81. 81. What is going on with this market? I mean, a lot of people were predicting that the price would fall, but fall so fast, so far in 7 days? Wow. I'm sure a lot of people have been caught by that trap. A lot of people. I mean, I don't even know what to say. I just hope that people who were bidding up that stock took out their profit when they saw it, they took it off the table when it was there, or they had stop losses to limit their losses, because 81% in 7 days, that is horrendous. That is absolutely horrendous. Well, for more positive news, depending on what side of the fence you sit on, American Resources Corporation, which is a small cap, so that's a smaller company with a market cap of under 2 billion. That stock popped this week with good volume, and that stock is up 156% in the last week. So that's 156% in the last week, which is impressive. But you probably wouldn't have heard too much about that in the media because everyone was still talking about the crazy volatility with GameStop. So my question to you, and my question to anyone you know who invested in GameStop recently, is: did you secure the bag, or are you holding the bag? Did you take the money off the table when you saw it? Did you lock in profits? Did you take your cash out of the market, or are you still holding the bag? That is what I want to know, because I've seen lots of memes online. I've spoken to lots of people. I've heard people who have taken their profit when they saw it. I've heard people say that they're going to double down and essentially buy the dip. But buying the dip at 81% loss, to me, sounds a bit crazy, because simple logic dictates to me that you're going to need the same or similar volume that made that price peak around $400. You're going to need the same amount of people buying up the shares to get back up to that point. So I'm not sure if that logic holds up for doubling down, but that's my sort of loose opinion on the item there. But what are you doing? What have you heard people saying? Because the sell-off this week has absolutely been devastating. I mean, anyone who's still holding the bag, that's severe losses. Severe losses for anyone who entered late and still holding the bag right now. Those are some sort of eye-watering losses in a very, very short space of time. And what is also concerning is that a number of people would have made those trades close to the top, and some people even with leverage. So on paper, they probably even owe more than that 81% loss they've actually got there. So yeah, eye-watering, eye-watering. Um, yeah, I guess if people were able to short, because I know a lot of platforms restricted short selling, but anyone who was able to, yeah, they might have taken some good money out the market. But I'm not sure if there were many platforms offering the opportunity to short. I think most platforms had restricted short selling on that stock. American Resources Corporation. So this is a smaller company. Um, they're in the energy minerals industry. So they had a very good week. That's that stock. Um, it grew by 156% in the week. And the main reason for this is that during the pre-market on 2nd of February, on Tuesday, there was a report that came out that American Resources Corporations acquired exclusive rights to a rare earth element innovation with a particular university in the United States. So that gives them some supply chain advantages. So that made the stock boom on the second and Tuesday, and continued sort of growing in price for the rest of the week. So yeah, there's lots of other trades out there and lots of other opportunities for people to go long and buy into smaller, lesser known stocks that look like they've got some popularity with traders and investors alike. So yeah, it's always good to have a look and see what else is out there. So there are two types of analysis with regards to stocks. There are two different sort of schools of thought. Some people use just one, some people combine the two with regards to analyzing stocks. And those two types of analysis is fundamental analysis and technical analysis. So very simply, what is the difference? Well, with fundamental analysis, traders and investors look for potential trading opportunities using items around an acronym called CANSLIM. So there are 7 particular items around this. So the first one being current earnings. So how much money is the company producing at the moment, quarter to quarter? How much revenue are they generating? How much net income are they generating? How much debt do they currently have? Long-term and short-term debt, and how are they servicing that? Is the debt increasing quarter to quarter or year on year, or is it decreasing? Annual earnings. So what net income, what revenue is the organization making today compared to the last couple of years? So the year-on-year growth over the last couple of years, has that percentage been increasing? Has it been decreasing? To give a view of the performance of the company. Is the company producing new products and services that customers and the industry need and want? And that gives you a view of the potential future revenue generation opportunities. If a company is generating new products or services, there's more opportunity to sell and generate revenue. So, is the company you're looking at in their statements and in their public communications, are they talking about the new products and new services that they're going to be coming out with? Supply and demand. So supply and demand from a market share perspective. You know, how many other organizations are in that particular industry or sector that organization works in and provides services in? Is there enough demand for the products or services that they're offering? And equally, is there enough supply? Are they able to satisfy demand that exists for the products and services that they're offering? Are they a leader of their market or sector, or are they a laggard? And this is very important because there are lots of different companies competing in multiple sectors across the globe, but the leaders tend to get more press. The leaders tend to make the market move, so to speak. So it's always good to understand where the organization you're interested in investing in sits. Is it a leader or is it a laggard? Is it considered a leader or is it considered a laggard? Because that may influence your view on why you might or might not want to invest or trade in a company. And this one is very interesting. Institutional sponsorship. I find this particularly interesting to find out what other institutions are investing in that company. I find that very interesting because you see lots of information about percentages of other organizations' portfolios that they have invested in the particular company that you're looking at. and when they place those trades, and you can do some research to find out how regularly they've been buying up or selling shares in that particular organization to give you a view of what the so-called smart money is doing. So if a big hedge fund keeps on buying shares in a particular company in a particular industry, and they're managing multiple billions of pounds or dollars or whatever the currency may be, um, and you found a share that you think is good to trade, well, if the hedge fund is investing in it, then it might give you some further confidence to say, well, if they're doing it, I should do it too. And then the overall sort of market direction. So is the overall market booming in that particular sector, or is it declining? Because again, the market will dictate how successful a product or service is, and if overall the market is up, then that's a positive, and overall if the market is down, it may be a negative, but it may not necessarily be a negative, because you might have a longer term view and can have factor that into your investment decision about how long you might want to hold on to or get into a trade, and when you decide to enter and exit. So there are lots of financial ratios that you can find for fundamental analysis on many platforms. Yahoo Finance, for example, has all of the main sort of financial ratios to be able to do sort of fundamental analysis and screen stocks based on particular criteria. One website I've also used in my fundamental analysis is Simply Wall Street. So that has got a very good fundamental screener, which really cuts down the amount of analysis you need to do individually on fundamental analysis, because it really breaks it down and gives you some visuals to help make the process a bit faster, and summarizes a lot of this fundamental analysis slim items that I've just gone through. So compared to fundamental analysis, we have technical analysis, and traders and investors identify opportunities by using price charts and a variety of different technical indicators to try to predict the next movement of a stock or crypto so that they can capitalize off it. There are many different approaches to technical analysis and chart pattern trading, and it is quite complex. So by simple comparison to fundamental analysis, I went through 7 specific items that one could consider as part of fundamental analysis. But with technical analysis, I've only just got that one point. However, although by comparison it looks like it's less, there is a lot of skill and time needed to be able to master technical analysis to be able to consistently make money. Hence why I'm still a trainee, because I'm still learning how to be consistent with technical analysis, because I'm a total believer in it, but I'm still myself practicing and trying to get to a point where I feel like I am consistently winning with my technical analysis. But that is the difference, So a lot of traders use a combination of fundamental and technical analysis to choose when and how they trade. There are some people who only ever use fundamental analysis, and there are some people who only use technical analysis. If your next question is which one is the best, I can't answer that. I'd say from my personal experience, it's very difficult to trade in the short term. Short term being, intraday, so day trading, or swing trading within a month, just based on fundamental analysis. That, I believe, would be very, very challenging to do. I think for day trading and swing trading, you certainly need a good level of technical analysis to be consistently profitable, because the issue that I personally find with fundamental analysis is it takes a long time for your trades to play out if you're waiting for quarterly earnings to come out to hopefully see movement in your chosen stock. Um, so if you're day trading or swing trading, that's no good. So I think if you're looking to make shorter term transactions, I think you have to be able to do technical analysis in short